In this video, I'll be sharing with you how you can use the moving average that you are seeing on my screen right away. This is moving average period 200. The shift is 0, the method is exponential. You apply it to close. So take a screenshot and do the setting of it on your phone. Then have a relative strength index. You can see you do the setting and our commodity channel index. So if you've done your setting correctly, your chart will be looking perfectly like mine. This period of the moving average 200 exponential is one of the most powerful and effective moving average that you can come across as far as trading is concerned. But however, this particular moving average has been used by different traders in different ways. Some are using it effectively and making money, while others are using it blindly without much knowledge on its application and analysis. So what will this moving average do for us? This moving average is going to help us to determine the trend of the market. If you are struggling with how to determine structural point, when it comes to a downtrend, we are expecting that we are having a lower high, a lower low, a lower high, and a lower lower. Many a times, not all of us can be able to identify this structural point effectively, and that is why we are going to adopt this moving average in order to help us to determine the trend. Now, that does not invalidate the plain chart analysis. However, there are advantages to each of these trading strategy. Now, the advantage of this moving average is that the moving average will help you to escape price manipulation. Remember, price manipulation always takes place at the point of reversal. For instance, this zone all the way to this point is where manipulations, especially this point, is where manipulations take place. But if you are to go by your moving average, you realize that price has already established a strong movement before the moving average will give you a signal, which will help you to navigate through, escape the whole process of price manipulation. That is the advantage of it. But the disadvantage is that when you follow the structural method of a naked price chart using structural point, you will have an early entry compared to the person using the moving average. Alright, so if moving average will be considering making a sell around this zone after this confirmation of price closing below the moving average, you are using a naked chart, you are already into this trade all the way from this point. So that's just the advantage and the disadvantage. But however, these both are effective when applied in the right way. So having said all of that, how do we use this moving average? First of all, I will want to establish and to bring to your notice that this moving average pattern is not used in isolation, right? So if you must define the trend using the moving average, just as in this particular scenario, when price is below the exponential moving average 200, below it, it is regarded as a downtrend. And when price is above it, is an uptrend. However, you need to take note of this point. The price is just below it is not enough to consider it as a trend. Let price be consistent below it. So you can see price is consistent below it. So we can term this as what? As a downtrend. Now, another thing is for us to make entry, we need other confluence, not just the moving average, but we will need a candlestick confirmation. We will need a chart pattern, for instance. Okay, for candlestick, we'll be using a pin bar and an engulfing candle. All right, so you can see now here price came below it. And then another thing to take note of is this moving average point is being treated as a zone. Don't treat it as a line, right? So price came down, price went a bit above it. All of these side are zones of the moving average. Okay, so and then for us to make a sell entry, this is where the indicator window comes in. For instance, if we want to sell, we will want to see that our indicator window, if we get a divergence, is an additional confirmation. And then the indicator window should be coming from the upside. The CCI line should be coming from the upside. But when the CCI line is almost at this 20 zone, we don't consider that as an entry. Okay, so let's say in this particular scenario, price is already consistent, we are in a downtrend. So how do we make our entry? Look at this. This is a pin bar candlestick formation, was rejected from this moving average. And then look at our CCI is coming from this zone. So this is a good entry for us. And then you can see how that trade plays out beautifully well. Another time again, you can see how this price pulled back here. You see that rejection? This is our sell entry. Our stop loss is above the moving average. You see how that plays out as well. Okay, and then look at this. Remember, we already know how to mark our point of interest, right? This is our fair value gap. There is a fair value gap in this zone. So price came to fill into that fair value gap. So we are not still trading in isolation. We are bringing in the knowledge price is below this point. So anything we want to see is the behavior of price in line with the point. Look at here now, this resistance zone. So you can see that. And then look at this engulfing candle. That is our sell. And price pull to the downside. So this pattern, this method are consistent, very much consistent. Look at this one. That is a divergence there, and then you can see how price plays out beautifully well trading this particular strategy. You can see this is a short pattern. This is a bearish flag pattern. Clearly state out, and you can see how price plays out to the downside. So these are workable. Here again, this is another pattern. Okay, and it keeps playing out on and on and on and on. And then here, then over time, price did what? Price move and cross above the moving average. So look at what happened. Price in that scenario came back to retest this moving average, went up again, came and retest it. Then here now becomes our entry. So you see that buy move, and then price remain up above. So what happened here? Price came to retest this and break through it. So we don't have an entry yet. What is happening now? Price is below the middle Bollinger. Price is below the 200 moving average. So what do we want to see subsequently? We want to see price pull all the way to this zone, and then our CCI should be somewhere here, that giving us a divergence. Okay, and then if we look at that zone, we don't really have a point of interest in that zone. So the only point of interest we are having here now is our moving average. So our moving average is also a point of interest. So we want to see price pull into that zone and then give us a beautiful trade entry. Okay, so that works, and it is very, very much effective. I'm telling you, it works across all the time frame. This is crash 500, and this works. Can you see that? Can you see how this works? You can see how price went, and then price later came back to retest this zone, You see that, and then you see that movement back to the upside. So these are what we can adapt. Look at this now. Price pull back here. If it tests this zone, can you see that? And then this is a divergence. Now the advantage, the only thing is this strategy, you will need patience. For this to play out, you will need patience to wait for price to pull back to these zones. Okay, it is not always, but since you have more assets, you can compare it and then have the patience to wait for price to pull back. And I believe you have learned something new. Do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in the subsequent video.